Good afternoon.
Hello and welcome to ИнстаФорекс Economic News TV channel. With us, Takhmina Salomova
And Anna Kasatkina.
You're watching the currency and commodity markets review for the previous week.
What change took place in the foreign exchange market throughout last week?
On Friday, the US dollar plummeted to more than 2.5-year lows.
And what triggered the sell-offs?
Doubts over whether the Federal Reserve System will be able to deliver another interest rate hike until the end of this year. The US dollar index traded at 91.31 late Friday, with a weekly decline of 1.55%, the largest weekly percentage drop since late June. The dollar hit 10-month lows against the Japanese yen. The dollar-yen pair fell to 107.32 before pulling back to 107.81 in late session. The greenback ended the week with a loss of 2.2% against the yen. It was the biggest weekly percentage decline in more than a year. Weakened expectations for a third rate hike this year, compounded by tensions with North Korea and worries over the economic impact of hurricanes in the southeastern states, pressured the dollar. Concerns over political turmoil in Washington have also fed into recent dollar weakness. An agreement to postpone U.S. debt ceiling negotiations until December, which would coincide with the Fed's policy meeting, have reduced chances for a rate hike. The European shared currency ended slightly high against the dollar. It reached 1.2036 after rising as high as 1.2092 earlier, the highest level since January 2015. The euro ended the week up by 1.48%, and it is up by almost 14% against the dollar so far this year. Demand for the single currency continued to be underpinned after it was reported on Thursday that the European Central Bank may start tapering its massive stimulus program this autumn. The pound sterling rallied to a 5-week high of 1.3195 against the dollar late Friday. The pound was boosted by stronger than anticipated data on UK manufacturing output growth. That is all about the current tendencies on Forex. And who took the lead in the commodity market last week, bulls or bears?
On Friday, there were mixed movements. Crude oil prices were in a bearish trend.
And what fueled the sell-offs?
In the US, it was slow recovery from flooding due to Hurricane Harvey, which made landfall on the Texas coast 2 weeks ago. Oil prices dropped by more than 3% Friday to the lowest finish in a week. October West Texas Intermediate futures fell by $1.61 to $47.48 a barrel on the New York Mercantile Exchange, but steel prices gained 0.4% from last Friday's close. November Brent crude futures slid by 71 cents to $53.78 a barrel on ICE Futures Europe, with prices up nearly 2% over the week. In the US, demand for oil from refineries has been slow to return to normal levels in the wake of Harvey. As for late Thursday, 12.8% of the US refinery capacity was down due to the storm. Brent prices gained for the week, supported by higher refinery demand in Europe and Asia. European and Asian refiners have had to increase production, with US Gulf Coast ports and refineries out of commission. Meanwhile, gold prices notched a third weekly gain in a row on Friday, closing at their highest level in a year due to the softer dollar and US Treasury yields. Gold futures for December delivery settled at $1,351.20 an ounce, pulling back from an intraday high above $1,362. The settlement was the highest since September 6, 2016. The precious metal posted a 1.6% weekly gain as the greenback was pushed towards its first week in a month.
Takhmina, thank you for the commodity market overview. You have been watching the weekly currency and commodity market review on ИнстаФорекс TV.
It was presented to you by us, Anna Kasatkina
And Takhmina Salomova.
Have a great day. Goodbye.
See you.